Macro summer is when interest rates are falling, inflation is falling, and growth is picking up. My forward-looking basis is that the economy picks up, inflation keeps falling. I think it'll overshoot to the downside, which is the opposite of everybody else's narrative of sticky inflation. And I think markets are already showing you how excited they are about this idea, because we've just gone through a ridiculous rate cycle, kind of an unprecedented rate cycle on the back of the unprecedented inflation.
Welcome back to Library of Wealth. Today, as we step into a world of financial intrigue and dynamic market forces, we'll hear the latest prediction from Real Vision CEO, Raoul Pal. With the keen eye of a seasoned investor, Pal casts a spotlight on Bitcoin and the expansive cryptocurrency market, recognizing their significance against a backdrop of economic uncertainty. With an air of urgency, he also highlights the mounting concerns encircling the colossal $6 trillion debt maturation slated by year-end. Amid this fiscal tightrope walk, Pal discusses the economic indicators we're seeing, as well as the debt dynamics and the pivotal role of central banks in shaping the market in the last part of the year. He points out that the Federal Reserve, steadfast in their quest to maintain interest rates amidst a storm of mounting inflation and debt pressures, aim to orchestrate a balance between taming inflation's fiery wings and upholding the pillars of the economy. This steadfast commitment to a higher-for-longer approach stands as a cornerstone of the current economic narrative. As we journey through the latest interview with Raoul Pal, we'll look at the ripple effects across the investment landscape and how Bitcoin and cryptocurrency are now reshaping the very fabric of finance. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
When you divide, for example, the S&P 500 or gold or real estate by the Fed balance sheet, they've been flat since 2008. And I discovered within that process that only two assets actually have risen versus the debasement of currency. That was technology stocks and crypto. Both were in secular uptrends. So this, like clockwork business cycle, which is based around the debt refi cycle, happens to be exactly the same as the US election cycle. It also happens to be exactly the same as the Bitcoin halving cycle. So all of these cycles are at the same time every time. So here we are today. Today, we're at the bottom of the business cycle. This is the kind of recessionary era. Businesses are laying off staff. Inflation is starting to fall sharply. The forward-looking markets, technology and crypto, priced in a recession last year. And they've been recovering since because they've been following the forward-looking indicators of financial conditions and other things. Right now, stuff like the Russell 2000 and oil is living in the present day, which is slow economy. So they're at their lows. And everyone's like, what the hell is going on? Why are these tech stocks going up and everything else is going down? It's because they're forward-looking, as it is their job. So I've been very bullish. I saw the liquidity cycle, which is the key driver of all assets. The liquidity cycle is based around this interest rate cycle, which is based around this whole debt refi cycle. Liquidity started bottoming last year in October, November, December, and that gave us the signal to start getting long both crypto and technology. And that's been, phenomenally good. I mean, this year, the Nasdaq's up 45% and crypto is anywhere between 80 and 500% this year. And that's got people scratching their heads. But our forward-looking indicators of the business cycle suggest we're going into what is, right now we're in macro spring. That's when the weather kind of gets warmer every day, but sometimes it's raining and sometimes you've got a frost and other times it's hot and you're like, it's always confusing. That's macro spring. We're about to start moving towards macro summer. What is macro summer? Macro summer is when interest rates are falling, inflation is falling, and growth is picking up. That's the kind of holy grail for macro and for investing. And we should be in macro summer for all of 2024 and into 2025. And so my forward-looking basis is that the economy picks up, inflation keeps falling. I think it'll overshoot to the downside, which is the opposite of everybody else's narrative of sticky inflation. And I think the markets are already showing you how excited they are about this idea, because we've just gone through a ridiculous rate cycle, kind of an unprecedented rate cycle on the back of the unprecedented inflation. That inflation, I think, was just driven by the pandemic. If you shut down, all demand and shut down all supply and then bring it all back on at the same point, you create chaos. Exactly the same happened after World War II. After World War II, suddenly everyone came back into the labor force and factories had to retool from making munitions to making cars and washing machines and whatever. And we got a massive inflation then. But then what happened is it worked its way through and we just had strong growth going forward. So we've still got the problem remaining of that GDP formula. How do we pay for this bloody debt? Because it keeps going up. The higher interest rates go, the more bonds they have to issue, which is why I think they want to bring interest rates much lower than people expect by being so late in hiking, so they can undershoot and have the cover to paper over the cracks in the system yet again, and they'll use like the commercial real estate and the banks as one of the excuses to do it, to start using the balance sheet. But we've still got the problems with the economy, is it's not growing fast enough to pay the interest on the debt. So if the economy on average is growing at 1.75%, and let's say interest payments on debt is about 2%, and the government's 100% of GDP in debt, that's all of GDP just to pay the debt.
Raoul believes that the more money that's printed, along with the government's quantitative easing, has resulted in complete malinvestment and massive inflation. He argues that while Americans may have benefited initially from the money printing, the rest of the world did not. Raoul believes banks are attempting to achieve interest rate neutrality without completely destroying the world economy. However, investors have begun speculating that tighter financial and credit conditions for households and businesses are likely to weigh on economic activity. Raoul looks at what economic indicators we can expect concerning inflation, the stock market, and the potential impact of cryptocurrencies on the global monetary system.
Crypto side has been, outside of AI, the fastest adoption of any technology in all of humanity. It has been following a perfect log trend. And what was staggering is last year, the number of active wallets in crypto grew 42% in a year when the market went down 80%. That's like, oh my God. We're now at 516 million users. By the end of 2030, we'll be well over 1 billion users, maybe 2 billion users. So it is a very prevalent technology. And it's happening this cycle everywhere, kind of everything everywhere all at once. The banks are using it. They're already trying to settle securities on it. They're using it for payment systems. We're seeing Visa using it for payment systems. We're seeing mega brands like Mercedes-Benz or Starbucks using Web3 NFTs. We're seeing Hermes, LVMH as a broader company adopting this. We are seeing ongoing adoption globally of cryptocurrency as an investment vehicle. We're seeing the institutions investing in it. I've had on my show Texas teachers, they were pioneers in the space. We've had Franklin Templeton, Fidelity. These are big companies. Now we've got BlackRock. So what is going on here? Here's a nice way of framing all of this. And it makes it easier for people who are kind of crypto cynical or don't really understand it. We have two worlds. We talked about this before. We have the physical world that we live in, your world of North Carolina, or my world of the Cayman Islands. And then we've got the digital communities that we live in. The crypto land and fiat world are these two worlds. We've talked about GDP is slow in fiat world because of aging populations, debt, and lack of productivity. But over in crypto land, the population's growing at 42% a year in a year when the economy went down 80%. You've got productivity improvements as new uses of blockchain technology get introduced every day. And you've just wiped out the debt from the previous cycle. So you have an extremely fast-growing emerging market. And what happens is you're now seeing fiat world participants set up offices in crypto land. Franklin Templeton, Fiat, Franklin Templeton, Fidelity, TRS, they're setting up offices there. So we love this place. We think it's a dynamic economy. We want to build stuff here. Then the ETF comes along. The ETF, people need to think of as a trade deal between fiat world and crypto land. So it's a trade deal to allow capital to flow into this other economy. And as that economy, crypto land, grows fast, a lot of money is going to go down through this pipe of the trade deal, which is the ETFs, and then will flourish within that economy. So we're seeing this giant sucking sound of people seeing this economy. It's much like when China came onto the world stage. Is everybody flooded there? Everyone put their capital there. Everyone built offices there because they could see the big opportunity. Well, this is the fastest growing economy we've ever witnessed. It just happens to be a digital one. It has its own system of currency, its own interest rates and central bank policy. It has a financial system, which is DeFi. It has states like Bitcoin, Ethereum, Solana, whatever it may be. These are states within crypto land, and those have different policies. We have taxation systems within crypto land. We have assets, NFTs, within crypto land. And it's just because they've all been more attractive over time, it's sucking in more and more of fiat world into it. And eventually, I think it basically subsumes fiat world.
Raoul Pal uncovers how changes in cryptocurrencies can send ripples effects through our wallets. Imagine a world where borrowing money becomes more expensive. Those cool credit card deals and car leases might not be as sweet. But it's not just about numbers, it's about fairness and how many things we can buy. Among the market noise, Bitcoin emerges as a rebel in the money world, shaking up old traditions. Pal points out that the everything code is like saying money is this invisible thread that's connecting it all together. With big banks being the guardians of balance, he says they're working behind the scenes to keep things steady, preventing financial chaos, but he believes the inevitable is coming. What do you think about the latest interview with Raoul Pal? And how do you think his prediction for Bitcoin, crypto, and the financial market plays out in the last part of 2023? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.